Hi everyone, in this video I'm going to show you a breakdown of the DXY, which is the dollar index, and how we use this to aid the analysis in terms of EURUSD and GBPUSD. So first of all, if you open up Trading View and you go into the top left corner and search for DXY, which is a US dollar currency index. So if you trade in the USD pairs, you always need to look at this first. This is negatively correlated to the EURUSD and GBPUSD. So let's get started. First of all, you go on the weekly time frame and you want to track the price between two levels, your resistance and support. So as you can see, this is a resistance because price changed from bullish to bearish, high to low, green to red, and this is a support which changes from red to green. Then you go into the daily time frame and you want to do the same thing again. So you go on this side and you grab the rectangle tool. I can clearly see there's a higher low formed here, so this is where a point of reaction where price changed from bearish to bullish, a red candle to a green candle. So this is a support region here on the daily time frame. So I like my daily zones in red. You can have them any color you want, and then we do the same thing for support. So I can clearly see there's a support region here with price change from a green candle to a red candle, where price change from bullish to bearish. Once you've got the two zones on the daily, you then go into the H4 time frame. You do exactly the same. Get the rectangle tool out, identify your support and resistance. So as you can see, I can clearly see this is a resistance here where price change from bullish to bearish, a green candle to a red candle. It's formed a lower high because it looks as though it's going down in a slight downtrend. I like my H4 in yellow. You then want to do the same thing and find support. I can clearly see there's a support here. Drag it to the wick. So this is where price change from a green candle to a red. Here once and twice. So it's respected it twice, so you got your support and resistance. So as you can see, price is between the two levels. Going forward till it is broken, we can expect price to respect this, and it will go to this region here, where it would then potentially go down, where retest it, potentially go up, retest it, go down. So price always moves between support and resistance. When it's broken it would expect to go to this daily level where it can either go back down or it could breach it and go up. That is when we would update the levels. Same here, you can breach the H4 zone and go down. So that's why it's key to use H4 levels and trade next to the level. So that's just to aid your risk management. So as you can see, when price approached this here, it's gone up. So we can expect now price to be in an uptrend, go to this region here. So if the DXY is going up, we can expect the EURUSD and GBPUSD to go down. So as we can see, DXY is going up on the H4, which means there should be sell trades on EURUSD and GBPUSD today, respectively. So I've done the analysis on the DXY. Now what we're going to do is we're going to go into EURUSD. So I'll just clear the drawings from last week and I'll start from scratch. Trading view, top left corner, EURUSD, and select which broker you trade with. So mine's IC Markets. You then go into the weekly time frame where it says W. Each candle represents a weekly candlestick, and you want to do the same thing here. Resistance, support. Price change from bullish to bearish, bearish to bullish. Go into the daily time frame, repeat the process once again. I can clearly see a lower high was made here. Price change from bullish to bearish. It made a lower high, and it's a point of reaction. So this is the most recent support on the daily. And the most recent resistance. This is the most recent support, where price is using it as support and it go up. So there's the support and resistance. You go into the H4 time frame, and I can clearly see there's an uptrend. So to aid your analysis as well, you can draw your trend lines to help visualize and predict where prices go next. Now that I've done that, you want to get the rectangle on H4 and repeat the process. You always want to identify your support and resistance levels. Key support there, key resistance, and support is here. There you go. You then want to go into the H1 time frame, which is your intraday analysis time frame. You go into the left hand side and you select Fib retracement. So because this is Monday, we look at the previous day, which is Friday. You click the Fibonacci tool from the most recent high to the most recent low. So this is the most recent high from last week, the Friday, and this is the most recent low for that day on the Friday. So that is your 100%, that's your 0%. So what can we expect with this? We can expect a retracement to any of these levels before it goes back down. As you can see, I'll just show you with this brush. Once price goes here to here, it's made this move, you know the next day it can retrace back to any of these levels. So it can retrace here, 38.2, 50, 61.8, 78.6. What do I mean by that? Price has gone from one level to another the previous day. It can then retest it and go up. So here in about 23.6, it could retrace further, 38. It could retrace further at 50. It could retrace further at 61. The best retracement is 78.6. So I know when price reaches this level here, it's a very good level for a sell. Obviously 100% is the best because it's close to your level, but this is a very good retracement. And as you can see here, look at this. Let me just remove the drawing so you can clearly see here. Look at this, it retraced to 78.6. So once price got here at 7 o'clock in the morning, 6 o'clock in the morning, you could have entered a sell trade. So you could have entered a sell trade here, and your GP would have been there. And if you could have currently been in the trade now, and you would have been in profit. But obviously, I only trade London session 9 a.m., 8 a.m., 9 a.m. to about 4 5 p.m. So I missed that entry. And if I was trading at 9 o'clock, I would have entered on this candle here. I'm not trading today because I had a lot of meetings this morning, so I haven't had a chance to actually hit the charts till now. It's actually 3:30 today on a Monday in the UK, so I'm not actually going to take any trades right now because the session is due to end. However, if I was trading, I would take entry on this candle. Stop loss would have been here. It is a large stop loss, but your risk to reward ratio is 1.68. It's okay, it's not bad. Ideally, anything over 2 or 3 is great. So it's 1.52 risk to reward ratio trade, and if you entered it, it would have been great. So remember, if you trade in EURUSD, it's negatively correlated to the DXY. So remember, DXY was going up. Remember on the H4, I said, what's going to happen? It's got to support and it's going up. So that means if the DXY is going up, the EURUSD is going down. That means it's bearish. And as you can see here on the H1, it is bearish and it's a sell trade. So that is the entry I would have took on EURUSD today. And I hope that explanation helped in terms of you understand price action and how you use support resistance and why we use the Fibonacci tool. So because there's a similar price action for GBPUSD, I'm going to go ahead and repeat the process. So remember, DXY is going up. Let's see what's happening with GBPUSD. So remember, track the price between 2 levels to get support and resistance. You then go into the daily time frame and you select the rectangle tool. So I can clearly see this is the most recent support on the daily time frame. And this is the